Imagine having 7 out of 10 trades be losers and still be up 8% monthly. How is this possible? In this video, I will show you with proof that this is possible, and I will also show you how I take trades that look like this, that have high risk to reward ratio. If you're new to the channel, subscribe. I have a free mentorship program. Link will be in the description. Let's jump into the video. So the first thing is setups. So what is the return potential of your trade setups? And we shall look at the maths behind this. Now, let's say for example in this trade, my stop loss is at this high and I am targeting this low here. And this is a 1 to 2 risk to reward ratio. So let's look at the math behind how to get returns even if you have losing trades. So hypothetical, if you have a total number of trades which is 15 and you risk about $30 per trade and your starting capital is $600. So if you have a 1-to-1 ratio, of course you have the 3 winners, you have 12 losers. At the end of the 15 trades, your account balance will be standing at 330. And for 1 to 2, you have still the 3 winners. At the end of the 15 trades, you have $480. Still a loss. 1 to 3, you have $510, which is still a loss. 1 to 4 is you are at break even, and a 1 to 5 risk to reward ratio, you are at $690. We want trade setups that have the potential to give you a risk reward ratio of 1:5. So how does this look like in real life? This is an example of a trade setup that has 1 to 9. Point being, there are trade setups that have higher risk and you might kiss some frogs to get your prince, but once you have your prince, you know, it offsets a lot of the losers. So to win, you must play the game, and the game is risk management. I have my own rule, which is I must have at least 20 opportunities to play before blowing up my account. This gives me a lot of wiggle room. Now, let's look at my results from the last month on February. And as you can see from the table, I had a total of 14 trades. I had 6 winners, I had 8 losers, and I had a total return of 7R. So what does that look like? You can see I recorded everything. So here's one loser, here's another loser, here's a winner, here's a winner, number 2, winner number 3, here's a loser, here's winner number 4, here's a loser, 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 winner number 5. And yeah, I had 5 winners, the rest were losers. And you can see that the winners greatly offset the losers because the winners are big winners. And that's the point. If your strategy is giving you losing trades, but the potential for winning trades is huge, then that means you are on the right path and the losers are just the price you have to pay in order to get the winners. Number 2 is your setups should be repeatable. That means that they should follow a set of rules that make them identical when they are forming. And that is how I have arrived to this trade. So how exactly do we arrive here? Let's break this trade down. So step number 1, I have my weekly cycle. Weekly cycle meaning where is the high and low of week. That is just step 1. So if we look at last week, the high of the week here set on Monday. On Tuesday breaks out and gives us a failed breakout. On Wednesday again it breaks out. And then on Thursday, a very interesting thing happens. Price breaks out of the high of the week, but closes back inside of the high and the low. So you can see we have the breakout, price closes back inside of the range. This is what we call a failed breakout. Now, a failed breakout is a signal to sell at the high if it occurs at the high, or buy at the low if it occurs at the low. So once we have a failed breakout, then this becomes day one. And once we have day one, it means that we can sell on day 2 or day 3. That is why I have this D3 sell, which means it's day 3, so you can sell. Now, also, when we are looking at today being a Monday, we have the low, we have the high of the week. So once we have the high and the low of the week, we also have a place to sell. We want to sell high. Step number 2 now is the trading day, and today is the trading day. I am in the London session, so step number 1 is identify our timing window, which is from 2 to 5 a.m. Step number 2 is identify the high and the low of the day prior to the session opening. This is the session open. This is the high of the day. Alright, and this is the low of the day. Step number 3 is let the first hour close. And the first hour is 2 to 2:45. Once the first hour closes, the next step is adjust the high accordingly. So we adjust the high because we have pinned it. So if the first hour breaks out or pins the high, extend the high, and that becomes the new high of the day. Then the next step is we look for a breakout. And this is the breakout here. Once we have the breakout, we look for a 1, 2, 3. And a 1, 2, 3 is here, what we are looking at. This is 1 up, 2 down, 3 going up to the breakout. It looks like an N. Let me draw it for you. 1 up, 2 down, 3 up, breakout. Simple. So once we have 1, 2, 3, then once this candle, if the next candle is bearish, that is our cue to enter. Our stops above that high, targeting the low of the day. And frankly, that is all I've been doing. You can see in all these trade setups, we have the 1, 2, 3 breakout entry for the move down. We have the 1, 2, 3 breakout entry for the move down. We have the 1, 2, 3 down entry for the move up. We have the 1, 2, 3 breakout for the move down. We have the 1, 2, 3 breakout for the move down. So this goes to show you that you don't need a lot of winners. You just need a high quality setup and the balls to take losers as the price to pay for the big winners. Anyway, if you got value from today's video, subscribe, check out the free mentorship, and I will see you in the next video. Peace out.